$10,000. It might not make you rich overnight, but invested wisely, it can completely change your financial future. The truth is, most people don't need millions to start investing. They just need a plan, discipline, and the courage to begin. Because wealth isn't built by luck, it's built by consistency. And if you can master how to grow 10K the right way, you'll unlock the blueprint for every dollar you earn after. So today, we're breaking down how to build a month-by-month investment plan with $10,000, a strategy that turns small steps into lasting wealth. This isn't about quick profits. It's about smart positioning, patience, and power. Because those who plan their money control their future. Every legend in finance started with a moment just like this. A single decision to take control. That first dollar invested is more powerful than the next 1,000 you'll ever earn. The road to wealth doesn't start with fortune. It starts with focus. And as you'll soon see, 10K isn't small. It's the seed of something extraordinary. The question is, will you plant it or let it fade in the noise of hesitation? 1. Month 1 to 2. Build your foundation. Before you invest a single dollar, your first investment must be security. Start by creating or reinforcing your emergency fund. At least 3 to 6 months of living expenses. It's your safety net when life surprises you, and it protects your investments from panic withdrawals. Next, eliminate high-interest debt, because compounding only works for you once it's not working against you. During these months, your focus isn't on returns, it's on readiness. Set up your brokerage account, automate savings transfers, and learn your risk tolerance. Every great investor starts here, money, with structure, not speculation. Think of it as building the base of your financial house, strong, stable, and ready to grow. Because a skyscraper doesn't rise on sand, but it rises on steel. The stronger your base, the higher you can climb. Discipline here builds freedom later. This phase might feel slow, but remember, every storm-proof fortress begins with quiet bricks of preparation. Patience now prevents panic later. Your foundation isn't just money, it's mindset. 2. Month 3 to 4. Diversify smartly. Now that your foundation is set, it's time to divide your 10Ki strategically. A balanced approach could look like this: 40% in ETFs or index funds for long-term growth, 30% in blue-chip stocks for stability, 20% in bonds or fixed income for safety, 10% in cash or liquid assets for flexibility. But this isn't just numbers, it's mindset. You're not chasing returns, you're building resilience. Reinvest dividends, review performance monthly, and stay consistent. Because the real secret to growing 10Ki isn't timing the market, it's time in the market. Each dollar now becomes a seed, Manu, and your job is to water it with discipline. Diversification doesn't just protect wealth, it creates it over time. Think of your portfolio as a living organism, balanced, breathing, evolving. Each category has a purpose, a rhythm, a reason to exist. Don't seek perfection, seek progress. Every small gain, every reinvested cent is proof that momentum is building. And in those quiet months when nothing big seems to happen, remember, that's compounding at work, whispering wealth into your future. Scan of month 5 to 6. Explore growth opportunities. Once your portfolio has a stable base, consider higher growth opportunities. This is where you allocate a small percentage, maybe 10-15%, into sectors like tech, clean energy, or emerging markets. It's not about betting big, it's about exposing yourself to innovation. Research ETFs focused on AI, green infrastructure, or global digitalization. These months are about learning and observing market behavior. Set up watch lists, read quarterly reports, and track patterns. Because understanding how markets move will give you the confidence to act, not react. Remember, growth comes from curiosity and courage, not from gambling. And if you stay informed, your 10Ki will grow into something far more valuable: financial wisdom. Here's where you step from student to strategist. Innovation is the new gold rush, but only the patient strike it rich. The goal isn't to chase hype, it's to identify the future before the world does. Every stock chart tells a story. Learn to read the rhythm between the lines. When others see volatility, you'll see opportunity. And when the market tests you, remember, diamonds are only formed under pressure. 4. Month 7 to 9. Automate and rebalance. By mid-year, your plan should start to feel automatic, and that's the goal. Set recurring investments into your chosen assets each month, no matter the market mood. This strategy, known as dollar cost averaging, helps you buy more when prices dip and less when they rise. Then, rebalance your portfolio quarterly to maintain your target percentages. This small discipline ensures your risk doesn't quietly creep higher as certain assets outperform. Automation removes emotion, and emotion is the enemy of smart investing. Because successful investors don't react to fear or hype, They stay the course. The more you automate, the more you build what matters most: momentum. Automation is freedom disguised as repetition. Every scheduled deposit is a promise to your future self. When markets shake and headlines scream chaos, you'll stay calm because your system is stronger than your fear. This is where amateurs panic, but pros persist. Each click, each transfer is quiet proof that you're building wealth without noise. And in those steady routines, you'll find something most people never do: peace in progress. 5. Month 10 to 12. Expand and review. As the year ends, review your progress. What worked? What didn't? What did you learn about your investing style? Use those insights to adjust for the next year, because your plan should evolve with you. If you've maintained discipline, your 10K is now diversified, compounding, and positioned for long-term growth. You can now consider expanding, increasing contributions, or adding new asset classes like REITs or even small crypto exposure. This final phase is about evolution, turning knowledge into strategy and strategy into wealth. Your first year was about building habits. Your next will be about scaling them, because wealth doesn't just grow, it compounds with clarity and consistency. Reflection turns experience into mastery. Growth is never linear. It's layered like the rings of a tree marking your progress. Each month you stayed disciplined was a victory against distraction. Celebrate small wins. They are the architecture of greatness. As your plan matures, so do you. Because in mastering money, you're also mastering patience, confidence, and self-control. The true currencies of wealth. $10,000 may not seem life-changing until you make it your seed for financial freedom. Every dollar invested wisely becomes a silent worker, growing, compounding, building your future. Don't wait for someday. The best day to start was yesterday. The next best is today. Because the investor who starts small but stays consistent always outpaces the one who waits for perfect conditions. The question isn't how much you have, it's how smartly you use what you have. So start now, follow your plan, and let time do its magic. If this video gave you direction, hit like, share it with someone starting their journey, and subscribe for more wealth wisdom. Remember, it's not about having more money, it's about mastering what you have. And with the right plan, even 10K out can become the foundation of your financial empire. Because in the end, it's not the size of your capital that defines you, it's the size of your conviction. You don't need luck when you have a plan, and you don't need millions when you have momentum. Stay patient, stay consistent, and remember, wealth rewards those who dare to begin when others hesitate.